Hello, I'm Grady Market Analyst with Bell Direct. The resources sector is an ever-changing space, especially in 2023, given global macro events, geopolitical tensions and the green energy transition, among other factors impacting commodity prices. David Coates is a senior resources analyst with Bell Potter with extensive experience in both the buy side and sell side of resources, in addition to holding a mining engineering degree, a first-class mine manager certificate and an MBA. David is here with me today to discuss the precious commodity of gold and other outlook for key commodities heading into 2024, especially on his horizon. David, thank you for joining me today. Firstly, let's start with the commodity that is sitting at 50-year high spot price right now, gold. What are your thoughts on gold and why has it remained so resilient in 2023?
Yeah, thanks, Grady. Really interesting question. So gold is going well. The market's finally, got some conviction on something which has been lacking a lot of this year. And I think the reason it's been so resilient is, the market's kind of been positioning for a rising gold price, almost for the last 18 months, I'd say. And what they've been looking for is some conviction around the peak in central bank interest rate rising cycles. And the market's been prevaricating on that through most of this year. But because of the interest, it's held the gold price up and it's been really resilient in the face of high real interest rates and a fairly strong dollar, all those kind of things, which would normally drag it down. But now the market really does seem to have some conviction on, the peak in the central bank rate rising cycle. And so gold's really well positioned because the market's, supportive of it. And it's coming off a relatively high base.
How do you see the gold price faring in 2024?
Yeah, I think it's looking really good. Central bank rate rising cycles or cutting cycles are typically fairly, medium to long term thematics in the market. So there's potential for that to be supportive for the gold price over a good period of time. Combine that with, like I was saying, the relatively high rates, real interest rates we're seeing are sort of multi-year highs, the highest we've seen really in a decade actually, and the US dollar index is also relatively high. It's come off a bit, but there's still plenty of room for it to sort of give up. That could really see the gold price go cycle quite nicely from these levels. So I think through 2024, it's a very supportive environment.
Now you have a buy rating on Capricorn Metals and Regis Resources. What went into these ratings and what are the key factors for you when analysing a gold miner?
So we've got buys on both those companies. Capricorn, I'll start with those guys. Really, really great delivery. They've been adding cash at sort of sector-leading rates, really since commencing production there a couple of years ago, and quite frankly, they haven't missed a beat. So they've gained a bit of a premium rating in the market. Their costs are low, so they've demonstrated the ability to make cash through sort of the inflation sort of cycle and margin compression that a lot of other producers sort of suffered from. So really, there it's just a good quality gold exposure, good quality management team, and an asset that's delivering the cash flow. With Regis, this is probably, we've got a buy on this. What we see here is much more of a sort of a deep value and much more sort of leveraged opportunity, which is the kind of thing you probably look for a bit more in a rising gold price environment. But again, it's quality underlying assets and that exposure to the gold price, which they do have. Been a bit unloved. Delivery's been a bit patchy, but they've started off FY24 with a strong quarter, and we see them also as being quite an interesting M&A target, with sort of 400,000 or 500,000 ounces of Australian-based production. That's meaningful for anyone, and cash flows that we forecast to increase significantly as their hedge book rolls off within the next sort of 6 to 9 months. So it closes out at the end of FY24. But also we expect free cash flows to increase pretty significantly out of Tropicana as well as total material movements there drop down. So we like both those exposures, with Regis probably being a bit more leveraged.
For an investor who may be new to the gold mining space but wants to diversify their portfolio to include gold exposure, what should they be looking for when assessing investment options?
Yeah, look, I think, if you're new to the space, I think one of the things you really want to be looking for, first of all, you want to be starting with a producer. So both those companies I mentioned, established production track records. But that a production company, as distinct from a development company or an exploration company, are going to give you that sort of immediate exposure to the gold price. That's probably the first thing you're looking for. To I guess sort of reduce your risk a little bit. Broadly speaking, multi-asset producers tend to deliver that sort of lower risk gold exposure. And in my view, if you're starting out, then an asset base that is dominated by Australian assets is always a good place to start, because there's plenty of good opportunities here before you need to perhaps diversify your gold portfolio to companies that might have assets overseas.
Now, David, expanding further into the broader commodities market, what commodities are on your radar in 2024 and why?
Yeah, no, also really interesting. Look, I mean, gold I think is looking good for 2024. More across the spectrum though, copper is definitely one of the commodities that I see having really strong fundamentals underpinning its sort of medium-term outlook. Hopefully we'll see some of that starting to come through in 2024. A lot of growth in the copper market comes from China, and the outlook there has started to improve. So that might help. That might be a positive catalyst for prices. But in terms of getting exposure to that renewable thematic, the electrification thematic, copper to me is really the best exposure to have.
What factors do you see impacting commodity prices in 2024?
So look, an improvement in the broader sort of global economic outlook. So we're starting to see a bit of that. Concerns around the Chinese property sector, for example, which is key to our one of the key factors for our exports is starting to improve. And we are seeing some differences of opinion in whether it's sort of a hard landing or soft landing. But I think as interest rates pull back, we'll see economic activity improving. I think that's going to be good for commodity demand and the sector in general.
Now, all investors love some stock picks. So what are 1 to 2 stock picks that have caught your attention heading into the new year?
Regis certainly qualifies as one of those. We see some really good positive catalysts coming for those guys, so that's one of the reasons I mentioned them. Being the hedge book coming off, cash flows improving, but also I think the market has certainly started to focus on those guys a little bit more. And another company I'd highlight a little outside that is Nickel Industries. They're in the middle of a really strong production growth profile. With nickel sourced out of the assets that they're invested in Indonesia. They're on their way to becoming one of the world's largest nickel producers. And importantly for us, with long life assets like that, what you're looking for is an ability to make money through the cycle. And they've demonstrated that. And on a growing production base, their EBITDA is massively leveraged to that. So we like those guys too.
David, thank you so much for joining us today.
No worries. Cheers, Grady. Thanks for having me.
I hope you enjoyed this gold and commodity outlook focused analyst interview with Bell Potter Senior Resources Analyst David Coates. If you want to stay up to date with all market commentary, analysis and industry expert interviews, be sure to subscribe to our Bell Direct YouTube channel.